Welcome to another episode of the Smart Real Estate Coach podcast, your source for actionable real-life examples and advice to help you move to the next level of investing. Each week, we help you make a quantum leap in your business, your finances, and/or your life. We want to help you take back control, help you thrive during chaos, and lead you through the current crisis to a better tomorrow. For more resources, check out smartrealestatecoach.com and be sure to give us a rating and review on your favorite platform.
Good morning and welcome, Wicked Smart listeners. It's Chris Pre, your host again, and we are traveling way past the 500 episode mark here with some amazing guests. My next guest, Mr. Kevin Bupp, is based in Florida. He's an investor. He's a top Apple podcast host. We'll talk about his show in a second here. He's a best-selling author of The Cash Flow Investor with over 500 million in real estate transactions under his belt. Remember, we're always looking for experienced people, guys, and/or resources or vendors that we personally use. He's based on his decades of experience, identify mobile home parks and parking lots as his top real estate investment and top priority in the current market. So this is going to be super current for you to dive into some cool things here, like why he believes that the mobile home parks is the route, right? I want to dive into this parking lot thing. I hope that got your attention a little bit. And then just how to evaluate some of this stuff. So we're going to rip it apart here. Enjoy the chat with me and Kevin. All right, Kevin, with that as a little backstory, welcome back to the show.
Hey, Chris, good to see you again, and glad to be back. It's been a while.
Yeah, I know I saw you recently, but not on this show since 2016. So for the Wicked Smart listener, that was episode number 52. I'm sure I did a real crappy job back then, but we're a little bit further along now, and I can't wait to catch up, Kevin. So thanks for coming back, buddy.
Yeah, thanks for having me. It's funny when you think back. I've been podcasting a long time too. I actually cringe when I go back and listen to some of my earlier episodes, 9-10 years ago.
Yeah.
So we continually get better, right? We continually evolve and get better.
Such is life. I'd love to, since it's been so long, talk about, I want to dive into the mobile home and the parking lot stuff, but I want to know originally, like, give me your path. Was that, your first endeavor in real estate, or what got you there? And then we can kind of update.
Yeah, no, great question. I'm really lucky and very grateful that real estate. I always joke and say it kind of found me. I didn't find it, and it found me at the young age of 19 when I was trying to figure out what I wanted to do in life. I was always entrepreneurial. You had a paper out at the age of 12. Was always doing side hustles, shoveling snow, mowing grasses, doing different things to make money so that I could buy the things that I wanted as a kid. Grew up with a working household family. Never went without, but didn't have a lot of excess. And so there's things I wanted, and I just found a way to buy them on my own. And so that entrepreneurial, interest kind of carried on through high school. And then post high school, college just didn't seem for me. I did go to community college, but I knew I wanted something else. I started tending bar in the evening just to make some additional cheddar. And, luckily, at the age of 19, I met a local real estate investor by the name of David. He happened to be dating my girlfriend's mother. So that's how the relationship came about. And, prior to meeting David, I'd never met another business owner in my family. We didn't have friends in our circle that were business owners or entrepreneurs. And so it was just a completely different world. In my mind, folks my parents' age worked 9 to 5, and got sitters for the kids when they had to go off to work early. And it's just, you took one family vacation a year, and that's what life was. And you had the weekends off a lot of times, right? That was really it. And so, but David, his life looked very different in my eyes. He seemed to always be around during he'd stop by the house during the week. I was over there visiting my girlfriend, and when I felt, older folks supposed to be at the job, right? And drove a very different car, had a different swagger. And so anyway, long story short, I became friends with David just by seeing him around, and got to have a general understanding of what he did. I still don't really comprehend it in full, but he owned rental houses. They pay for his lifestyle. His tenants paid down their mortgage, and the number of homes free and clear. He'd been doing it for 20 plus years. And so that was really intriguing. And he invited me to a real estate conference in Philadelphia way back when. It was Ron LeGrand. I think that guy's still around teaching, I believe.
He actually is.
Is he? Yeah. And went and saw Ron LeGrand. I didn't know what I was going to learn. I was just excited that he invited me to this conference, the 3-day conference that he had already paid for, and his business partner wasn't going to attend with him. And so I jumped in his seat, and honestly, that's what opened my eyes to the world of real estate. I came back from that event excited, but not necessarily sure where to put my energy. And so I made David an offer he couldn't refuse, and that was to, in between my classes, which didn't take up too much time during the week, and I tended to bar in the evening, so I had a lot of free time. I made him an offer he couldn't refuse, and I was come work for free. And I did. He accepted. He was older than I, and so I saw some areas in his business I could help him. And we did that. We worked together for like literally 14 months. I was there. I did whatever he needed, dropped leases off, made return phone calls, answered phone calls, put out signs, picked up supplies, dropped them off for vendors, went to see houses with him. All like basically I was just a part of his day by day. And through osmosis and being around him, I learned the business. At least theoretically, I learned the business. And at the age of 20, I bought the first property. And so really that was the foundational piece. It was a single family property. And throughout my early to mid 20s, I just basically, I didn't reinvent the wheel. I did what David did. I bought single family and smaller multifamily rental properties, built up quite a big portfolio, in my mid to late 20s. And then really didn't start exploring commercial real estate until probably about 5 years in. I bought some decent sized multifamily properties and then started expanding my reach into, I bought some industrial property, bought some retail. I was trying to, get a little flavor for everything to figure out, where I would hit my stride. And that was really the start of the commercial side of things. And I'll try not to bore you with all the details, but 2008 lost everything, had to restart over again. And 2011 is when I jumped back in. And that's when mobile home parks came into the fray. It was an asset class I'd never considered, never owned before. Accidentally found out about it, went and bought one because I wanted to see if it was as great as what this gentleman told me it was. And I bought that first mobile home park back in 2012, actually. And we've been buying them ever since. We've, now owned parks in 14 states. Got about a $400 million portfolio of assets under management. And it's been a fun ride. So I've done a little bit of everything. I've lost it all, rebuilt it again. And this is kind of my second go around. And, my business looks very different today than what it did back then. But it really started from that very first single family property. I bought it with $7,000 that I had saved tending bar with a private lender to come in and help fund the acquisition and repairs. And that's where we started running from.
I love the sort of the apprentice. I'll call it the apprentice model.
Yeah.
Because we've gotten calls, just for the younger listeners to hear this. We've gotten calls over the years. I think we've had 3 sort of apprentice shadows that come in just like you did. One refers us a lot of wholesale deals now. We often built a major wholesale business as a teenager. One became an associate of ours. Actually, 2 became an associate of ours. So that's a cool path. If you're listening and you're not sure what to do, I forgot that about your story. It's been a while since we chatted.
Well, how I felt about this, Chris, was like, I got back from this conference, the excitement, the energy you get going to these conferences. And I honestly, I surrounded myself with people. There were people there that I didn't feel were smarter than I. They just knew something I didn't, and they were making a ton of money. And I'm like, this is it. I can do this. I just need to know how. And I knew that if I came back and got back into my daily routine, that the excitement would dwindle over time. And then I would literally, a month later, I forgot that I had gone to the conference and the opportunity would have passed me by. And so that's why I needed something to plug that energy into. And we didn't have local real estate clubs where I grew up. I mean, Philadelphia was the closest. That was like 2.5 hours away. And so there wasn't a network immediately surrounding me that I could go kind of plug into. So David was that outlet for me. And I was like, well, heck, if I can help you in your business, then, hopefully I'll learn quite a bit along the way. And again, he graciously accepted. So again, my life would probably be very different today if that hadn't taken place, but very grateful that it did.
Well, 2 words come to mind. I like your opinion on this, and then we'll jump to mobiles. Association, meaning with people, or like proximity. I think it matters a whole bunch. You went through the crash like I did. So I don't know if you had any other examples or experiences like that were a proximity or association with people related that changed your trajectory besides Dave. Were there any?
Yeah, absolutely. So I started in Pennsylvania, and about just shy of 3 years into investing in real estate, I moved down to Tampa, Florida, where I live today with my family. And obviously, I grew up in Harrisburg, Pennsylvania. It's the capital, but it's a very small town. A lot of folks think Philadelphia is the capital. It's not. It's Harrisburg, which is about 2 hours away. And when I moved to Tampa, it was a much larger market, much more progressive city, lots more opportunity, lots more growth happening. I mean, there was a massive in-migration happening, still happening today. And so when I moved down here, it was a completely different world, and opened my eyes to a bigger game. And within the first couple of months of moving here, I met who is still a great friend of mine today and became kind of my second mentor. That really just opened my eyes to a bigger picture, to a bigger game. That was Rod Cleef. He's still around today doing this thing. And I met him and his brother when I first moved here. And at that time they had, I had about 30 rental properties. They had like 700 single family rental properties. And that scale was unfathomable to me. I thought I was the king. And then I meet these guys and I'm like, holy crap.
That was the case, right?
Yeah. I'm like, how? And I just became friends with them. We did some deals together. I helped them with some of their portfolio that was close to me. And so anyway, we brought value to one another, and I just became friends, and I got to surround myself with them and their team, Rod and his team, and learned how the big dogs did it. Right. And I just really took, pointers and tips and really started to really model my business around what they were doing. And that allowed me to scale at a great deal. And so really just trying to surround yourself by folks that are doing bigger and better things, or already doing the things where you want to be in your business or your journey. And so, yeah, he was really the second big piece. And I've had many other mentors along the way, but I'd say the two biggest critical ones were Dave in the beginning, just showing me the original path, and then Rod showing me the scale of like how you just think bigger, right? Like really your mind is your limitation, like whatever you think is possible. Yeah. So
I'm glad I asked it then. Yeah, Rod's awesome. By the way, I know Rod, and we've been on each other's podcasts, like you. By the way, so I don't forget, mention your podcast, please. So that's a writer down for them, and we'll come back to other stuff.
Yeah, Real Estate Investing for Cash Flow. So you can see the little green and white behind me, but Real Estate Investing for Cash Flow, you can find it, anywhere, Apple, Spotify, or wherever you might be listening to your podcast.
Nice. What would you say then, Kevin, to those listening? I know this is a challenge, and I think you know this, that they just have a block about doing what you did, getting out of your comfort zone. And granted, it was a free apprenticeship for us, or coaching or anything like that they're blocking. Because I just see so many people. I know the Wicked Smart listeners, they're no different. That they get to the new year, they set a goal for say 26, and then I ask every boot camp, how many people have accomplished their goals? They go, nah, not really. It's just like, well, why? So what would you say to them about coaching and association and proximity in general, to get out of their way, to get, a breakthrough? Anything you thought, any thoughts on that?
Yeah. I mean, I think in a lot of folks say that they're ready, but they're really not. Right. And that's why they don't actually take the necessary action. I think that, really understanding the reason why you've had an interest in maybe getting in real estate, like what do you hope to achieve, right? Is it a change of lifestyle? Is it a change in just your general income? Is it you thinking about retire? Whatever it might be, I think you need to get serious and get committed. And I don't know how to. Some folks you're just not ready yet, right? It hasn't become hard enough for them, and whatever challenge are looking to resolve by getting into real estate, right? They've got an objective, but like it hasn't become hard enough for them yet to really push them over the edge to go there. And so, as far as like the getting coaching, I mean, we all need it. I mean, I've got coaching in many different areas of my life, and I think my wife and I've got an incredibly strong marriage, but I get together with other guys and we talk about just how to continually strengthen, the relationship with my family and my kids, and I want to see what other individuals are doing. Yeah. I think I've got a lot of the answers, but I don't have them all, right? I need to know what other people are doing and how they're finding success in their marriage and with their families. And so in all areas of my life, I've had coaches along the way, and I think it's incredibly important. And I think a lot of people get caught up with the initial cost. I mean, they're looking at a cost, but they're not looking at the actual ROI. Like, what's the return on that investment that they're going to achieve by making that initial front-loaded investment? So I think too many people get hung up on that and just never make that next step, because they're only looking at, well, it's 3,000, it's 5,000, or it's 10,000. But yeah, what if that helps you make, even if you only double it, right? You put 10,000, you make 20,000. Everyone would say that's a great investment, right? But don't think of it that way. They get hung up on just the initial cost of it. And I think the last point I'll make mention of here, it's probably the favorite saying in our family. My boys are 8 and 11, and so they're at the age now where they've my oldest just went to middle school, and so they're facing their own adversity, different changes in their day-to-day in their environment. They're running into, they both play sports, and so there's moments where they're uncomfortable. They're out of their comfort zone. They're out of their little cushion. And our famous saying, our favorite saying inside the house is try to get comfortable with being uncomfortable. If you could do one thing in life, get incredibly comfortable with being uncomfortable, because you're going to run through run across many different uncomfortable moments within your life, and those are where the growth really occurs. And so get comfortable with being uncomfortable.
Yeah, I know that's awesome. Like, yeah, that's how you grow. Interesting, super interesting. We share a lot of commonalities with all this stuff. Let's go back to the first mobile then, because you said I think it was sort of an accident. I don't think you used that word, but so what got you into that? And then is that all you focus on now?
Yeah, that's a great question. So, 2008 happened. I went into like a 3-year period of time where it was more damage control, just trying to manage the chaos that occurred. Lost a lot of what I had built, dealt with, judgments and getting, process servers at my door on a regular basis and lawsuits and just working through the chaos that was, that was a result of the GFC that occurred. And, where I own, Florida was kind of one of the ground zeros. I mean, it was a complete mess here as far as real estate valuations were literally, less than half of what they had been prior. Lots of surplus inventory for a population that wasn't here yet. And so rental rates went down significantly. There was even folks that moved out of Florida because a lot of the jobs were construction based, real estate based. And so there was no work and people were moving away from the area for a period of time. And so it was very chaotic. And so for 3 years, it was just managing that mess. And in 2011, I kind of started really reflecting back of like, what did I do here? What, not necessarily what mistakes did I make, but how could I do it better the second time around? Like, what were some areas I could, when I go to rebuild, create a more sustainable and endurable company? And what I realized is that while single family homes are great, my portfolio had a lot of inefficiencies. And I think that would have been resolved based on technology today. But, we had, homes in 5 different counties. And so we had leasing agents that would go county to county, maintenance guys, county to county. And I mean, it was incredibly expensive to manage that single family home portfolio. And so at that point, I looked at the multifamily stuff that I owned and I realized that was way more efficient, right? Like that was a better way to kind of rebuild this and get scale. So I went into 2011 under the assumption that I would rebuild with multifamily, and just by happenstance, I met a guy, had a lunch with him, was introduced by a mutual friend. And this guy, Randy, happened to own a mobile home park. I had never considered the asset class. It's a formal multifamily. And so, Randy and I had a great conversation. He really, he started, kind of bragging about all the great things about mobile home parks. He got me so excited during that lunch meeting, Chris, that I left there and kind of committed to myself, I'm going to go buy one of these mobile home parks and either prove or disprove all these things that Randy had stated. And that's what I did. It took me about a year to buy the first one. 2012, bought that first mobile home park. It was Atlanta, Georgia. And I literally owned it up until about 2 years ago. So I owned it for quite a number of years. And turned it around. It was back then the market was still soft. There were still a lot of REOs. This one had been an REO, had been sitting there vacant for the most part for like 2 years, was in rough shape. Went in, took the little bit of capital I had left. I had, kind of salvaged a little bit of money going through those couple years of distress. And it had to work. I had to make that money work. Though I didn't have credit anymore. Credit was shot. Bought that first one and spun it into some magic and figured if I could do that once, maybe I could do it a second time. Went and bought the second one, and the third, and then fourth, and fast forward to today. That's a big piece of our business. I think we've probably acquired about 50 communities. We're going full cycle on, I think, 19 or 20. So hold quite a big portfolio of communities throughout a number of different states. And then mobile home parks is not the only thing that we invest in. It had been for about a decade. And then about 6 years ago, we got turned on to another asset class. It took a number of years for us to kind of study and understand and realize that it would be a great complementary asset class to mobile home parks. And that's parking. So, structured parking garages and parking lots. And so that still makes up a minority piece of our portfolio. But those are the two verticals. Like that's where we focus all of our time, energy, and effort. And we love both those asset classes. They've performed incredibly well over the years.
Okay. Who wants to be the next apprentice? Pretty interesting, guys. We started this apprentice program back as a July 4th, 2024 promo. That's where it started. And it was so incredibly effective. We were just going to run it for the summer. It was so effective immediately. We kept it. It's in place now. And what is it? It allows you to get into the community, the Wicked Smart community, for less dollars than the QLS home study course sells for right now on our site. In fact, when you go to smartrealestatecoach.com/apprentice-pod, apprentice-pod, when you go there, you're going to see that as an apprentice, you're going to get over $13,000 worth of coaching, the possibility for you to touch base with us if you want to 4 or 5 times a week. And it doesn't exist anywhere out there, frankly. That's why we did it. We did it for 2 reasons. One, no one is giving you the support out there. We keep hearing feedback, which is how this was born, that other educators are not giving support. They're just selling stuff. So it doesn't exist anywhere, and nowhere in the real estate education or coaching space. And we want to help you do one thing, deals. So we've wrapped the support mechanism around this. We've allowed you to get into a Slack community with the other associates who previously were protected in Slack, and now you get to jump in there and experience that for 12 weeks. You also get to come to the In the Trenches boot camp, which is private. It's a chance to hang out with the family team and one of the coaches for 2.25 days in our conference room, roll up your sleeves, get calls done, get deals done. If you come with leads, you leave with deals. Absolutely incredible. I could go on and on. Go to the website right now, check out more information about the apprentice, and I'm going to give you the In the Trenches bootcamp site, because you don't have to become an apprentice. It just happens to be free with apprentice and associate. So 2 links I'm going to give you, super important. smartrealestatecoach.com/ITTB-pod. That's going to give you some information about the bootcamp. If you want to buy a ticket to the bootcamp, it's more expensive, but you can. Just to come check us out. About 1 or 2 people every time we run it do just that. Or become an apprentice, and it's for free. smartrealestatecoach.com/apprentice-pod. So I want to talk about the parking lot thing. And first I want to ask you on the mobiles, are you buying them? How are you buying them? Are you buying them on creative financing, a bank, both, private money? How are you buying them?
Yeah, that's a great question. I'd say I've always been a huge proponent of creative financing, and years ago, back when we started buying parks, it was quite common. Number one, there weren't a lot of banks understood that asset class, and so it was a little bit easier of a sale pitch to the sellers. A lot of these were mom and pop sellers; they'd own them free and clear, and so it was a very fragmented niche back then. It still is today, but not as much. And so it was a little bit easier to kind of sell them on the idea of carrying the note back on the property. And so I'd say there's probably 15, maybe even 20 deals that we've done historically that were owner finance. Fast forward to today, it's a very different industry. It's consolidated a bit. There's still mom and pops out there, but there's a lot of banks in the space now. A lot of these mom and pops realize they can cash out and they can get a premium for their property. And there's lots of competition on the buying side. And so normally about 1 deal a year, we can find a mutual benefit with the seller to where it is in their best interest from a tax standpoint to do seller financing. We can meet them on price and we come together and get a deal to happen. But most of the time we actually have to come in and just get normal, bank debt and bring equity to the table and cash them out completely. And so not as creative as what we have historically been, but still opportunity there. And a lot of the stuff we're buying is larger, Chris. And so it's more of, it's not, a lot of sellers even nowadays aren't mom and pops. They're more professional groups like ours, and so they've already got a strategy in place of what they're going to do with the money or the capital, and or pay back investors, whatever it might be. And so a lot of times they don't even have the luxury of selling on creative terms, even if they would want to.
Right. Yeah. Especially at your level. Absolutely. Talk about the parking lot a little bit, parking lot niche.
Yeah, no, it's funny. It's again another one of those random things that came across my radar. About 7 years ago, I interviewed a guy on my show. I love having kind of off the wall things every once in a while, niches. Like 10 years ago, I did a whole series on car washes before car washes became the latest and greatest, and I did it on laundromats, bowling alleys, some random stuff. And one of the random interviews I had was a guy that he was a broker, but he was also an owner in parking assets across the country. So that was kind of his MO. He was like one of the few, there's literally less than a handful of brokers that specialize in the parking sector. He was one of those few, but he was also an owner as well. So not just a broker selling these assets. And I interviewed him, Chris, and I had authentic questions because I didn't know anything about the industry. You could not find any information on the real books on parking lot investments. And I was so intrigued after the end of that hour-long conversation that I flew him to Tampa, spent another day or two with him, and just got to know him over a year or two and learn more about the asset class. And again, never lost interest, only gained interest. And so we bought the first parking deal back in late 2020 and have been buying them ever since. So it makes up a small portion of our holdings. We're very specific. I mean, we're specific with everything we buy, but the parking stuff, it's got to check a litany of boxes for us. And a lot of the parking a lot of parking that was built. I'll use an example. The last deal we just bought was in historic downtown Philadelphia, like a block away from the Liberty Bell, 2 blocks from Independence Hall, tons of museums and other tourist attractions in the local region. But back when that was built back in the 80s, those tourist attractions were still there. But a lot of the demand for parking back then was derived from office properties and office tenants. And what's happened, obviously, over the years, I don't need to go into that diatribe, but we know that office is struggling as a result of not just even COVID, even prior to COVID. There's back to work initiatives, but I think kind of where we're at is where we're going to end up. I think it's as good as it's going to get. And so a lot of the parking that we look at, it's still heavily reliant upon maybe a office tower or 2 or 3. And I don't know how to solve that problem. And so I don't know how to solve the parking issue. I can't magically make the revenue come back in the parking garage if most of the demand is derived from the office towers. And so in order for the parking opportunity to really check all of our boxes, it's got to have a wide variety of demand drivers, with office being a very minimal piece of that. And so it's got to have professional sports arenas nearby. It's got to have a ton of restaurants. It's got to be a 24/7 city that's happening 24 hours a day, 7 days a week. It's got to have some type of government nearby. And it's also got to have quite a wide variety of tourist attractions in the immediate region. So once we have that wide variety, I know that if one of those goes away or declines, we're fine, because we've got 4 other demand drivers, right? And so we look at 100 parking deals to find one that truly checks all those boxes. And so like the Philadelphia deal that we just purchased, 70% of the traffic makeup of the folks that are parking there is all tourism driven. And I feel fairly confident that the Independence Hall is not going anywhere. The Liberty Bell is not going anywhere. The historical attractions in Philadelphia have been historical attractions for hundreds of years, and I don't think they're going to go anywhere anytime soon. So we feel very confident in the continued demand for parking, and there's a very minimal reliance upon office ever coming back to maybe historic levels.
Love it. What would you, as I'm thinking through a couple last questions, what would you tell the new investor you're established, right? And you and I have been around. We both went through the crash. Mm-hmm. What would you tell brand newbie listening, or I'm in W-2 corporate and I want to in the real estate, like, what do you think is the best route in the next decade?
Here's the thing. There's no shortage of resources out there, so we're kind of, we're in a place where if you come to me, I tell all of our employees and staff this too, don't ever come to me with, I don't know how to do that, or I don't know, or I don't know how, because I can promise you that there's a YouTube video, there's a podcast, there's a resource out there that's easily accessible if you just Google it, that will provide you with probably at least one answer, if not a multitude of answers on whatever challenge you're having. And so the litany of resources that are available today is just, it's unfathomable. You got started back when I got started. We'd have to scrounge to get, books on tape and there's like a couple programs out there. We have to piece it together, how to do this. And I didn't grow up in an era where there's even, local real estate meetups, right? And now every city in the country has probably at least one, if not more than one, local real estate meetup that occurs on a weekly or monthly basis. And so there's no excuse of not being able to surround yourself or get the information necessary to help you take the next step. And so I'd say everyone's a little different. I prefer actually rubbing elbows with people. It's probably because I'm a little older, right? I think that's maybe a little different of the younger generation, but I like getting in person. And so if you have the ability to get in person, whether it's a local real estate club or even, again, Chris, you offer coaching. There's a number of groups out there that offer coaching that have these networks and these communities already built that you can plug into. Yeah. That's the first step. You got to plug in with folks that are already doing that you want to do. It's getting started really isn't rocket science. It's just making the decision to do so and actually taking a couple steps, progressing towards, where you want to be, like what you ultimately want to achieve. And so there's plenty of people out there that are doing it. No shortage of resources. In fact, if anything, I think it almost could be overwhelming, the number of resources that are actually out there. Yeah. And so I think you need to get some tractor beams as well, right? Like you need to get a honed in focus and try to pick one thing and then find everyone within that niche that's doing that one thing, if it's single family, if it's small multifamily, if it's creative finance, whatever it might be, and then just ignore all the other stuff. Because there's a million and one different ways you make money in real estate. Pick one and just go deep in it. Forget about going wide, and maybe you go a little bit wider years down the road. But to like what I talked about, we were in mobile home parks for 10 years before we ever considered bringing another asset class into the fray, because we don't want to dilute our focus. It's really difficult to be an expert at many different types of real estate. I mean, you can, it just takes time. It takes time to master one. So just focus on that one, get yourself surrounded by folks that are doing it. And I'm not going to say guarantee success, but man, the probability is really high.
Yeah, I agree. I think it causes a lot of frustration in the industry when there's so much available to do the opposite of what you're saying. It's frustrating. It can be very frustrating. So great advice. How can these guys reach you, Kevin? Anything you want to share, just so we don't forget to do that, besides the podcast we mentioned? Fire away.
Yeah. If you want to learn what we're doing at Sunrise, we've got quite a bit of resources on our website as well. Investwithsunrise.com is our company website. You can see like current offerings. We even have a lot of historical case studies on there of deals that we've gone full cycle with. Kind of what was the business plan? What did we purchase it for? What improvements we made? What did the exit look like? What was the overall, ROI, return on investment? Again, we've got white papers that we've written on, parking lot investments, mobile home park investments. So lots of good free resources as well. But you can just get a general understanding of who we are, what we do, how we do it, and why we do it. And then my podcast as well can be listened to on the Invest with Sunrise page, or you can go find me on, again, Apple, Apple site, Spotify, and a litany of others. And then last thing, I'm pretty active on LinkedIn. You can find me on other social platforms as well, but I am pretty active on LinkedIn. So if you want to contact me directly, I still get in there and actually respond to my messages. And so, reach out to me on LinkedIn. We'd love to connect.
Love it. Thank you for sharing. It was great hanging out with you for another half hour. And I say 9 years to do it again, Kevin. So we'll
I agree.
connect. I appreciate everything you've shared. Super, super cool. Good to see you again.
Awesome, Chris. Good to see you too as well, man.
Okay, Wicked Smart listeners, that wraps up our time today with Mr. Kevin Bupp. Guys, here we are almost in November, and I've got a thought for you. I hope by now you have your business plan set up for 2026. And I hope by now you've at least delved in a little bit as to how we can play into your game plan for 2026. There's a way. It's not just about a skill set of doing deals. Our Genius model incorporates skill set, systems, and mindset. And more, I guess to my pleasant surprise, but more and more we're getting requests in our surveys for us to provide more and more of my mindset content base. Which is cool because we like doing it and I like doing it, but it actually concerns me a little bit that people are in great need of things outside of real estate and they don't understand it. So if that's you and you go, well, I haven't really picked a niche yet, or I'm not having great success in my niche, I would rip apart the mental side of your business. And if you're not sure what that means, let's you and I talk. It's real simple. You can do a number of things. You can go to smartrealestatecoach.com/Chris pre-call. Yes, that hits my schedule. I might have to move you, but that's my schedule. You might want to look into our apprentice program. It's by far the most effective thing we've done. Go to smartrealestatecoach.com/apprentice podcast. Simple, guys. smartrealestatecoach.com/apprentice podcast. And my only other thought for you is this, as a Wicked Smart listener. I would strongly suggest you consider in 2026, which starts now, we're in November, I would strongly suggest you consider looking at your goals as definitive, predictable plans versus this would be nice to have. Here's why I say that. I addressed this in one of my solo casts in case you didn't hear it. I, in every single boot camp, have asked, raise your hand, please, if you set goals for this year and last year. And they raise their hand. Everybody does, right? New Year's resolutions, goals, whatever you want to call them. I then say, keep your hand raised if you nailed them. You hit your goals. No hands. One boot camp, 2 people kept their hand up. I had my doubts, but 2 people kept their hand up and said they nailed their goals. Good for them. So why am I bringing that up? In our community, in the Wicked Smart community, what do? We work on a definitive plan for you. So for example, if your plan was, I want to leave my job in 24 months, it's not a goal that would be kind of cool if it someday maybe perhaps happened. It's, all right, let's rip it apart. Let's get a plan that in 24 months, give or take, we nail it within 2 to 3 months usually, we're going to have you exit your W-2. As long as you're willing to put the plan in writing, allow yourself to be held accountable with us, and allow us to direct you. We've done it many, 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 many times since 2014. Add that up, guys. It's over a decade. So let's help you do that for 2026. Let us apply for the job of helping you create a plan that you get ecstatic about, you get emotional about, and that with our help, you can hit, versus every year going, yeah, it'd be nice if I had that. And then you look back 12 months and you didn't get there. Okay. And I don't know if that's you. I'm just suggesting that maybe perhaps we connect and help you do that. Make it an outstanding week. Guys, for years, I've been at the business now 34, but for years, we had some rent collection things in place. We had bookkeepers in place. We had marketing to go to all these different websites. Now, we simply go to prosperity.io. It was built with us and you in mind. You can market your first property if you're brand new. You can scale if you're already in the business, but you can market your properties across 50 plus platforms in one click for way less than hiring a pro. You can easily collect rent online, so it's like a escrow service for you. You can track payments. You can get monthly reports so you know how your investments are doing, or if it's your first investment. And no tech headaches, no guesswork, just smart tools to help you grow with confidence. Get started now at prosperity.io, because every portfolio starts with a powerful first step. All right. Thanks for tuning in to the Smart Real Estate Coach podcast. If you got value from today's episode, guys, be sure to subscribe so you never miss a future episode. It literally takes one nugget to access some of the things we're doing. And when you're talking the size of the paydays, it's an opportunity cost that you can't let go. So don't miss an episode. And for goodness sake, share it with someone who needs to hear it. If you're ready to find your best path for getting started on your real estate investing journey in general, head over to smartrealestatecoach.com/get started. We're going to help you take the guesswork out of your next steps. See you in the next episode.